Hi, I'm Pidot, and welcome to Old Bull TV, a show from American Civics Exchange on the wild world of political prediction markets. Those online exchanges that have exploded in the last few years from an academic novelty into a thriving and, yes, legal 24/7 marketplace where hundreds of thousands of traders put real money on the line in an attempt to predict the decisions of voters and policymakers. And it turns out these markets actually manage to do that with impressive, if far from perfect, accuracy, typically rivaling and, yes, often surpassing the performance of the most celebrated pundits and data journalists. So, whether you're a professional political trader, an armchair forecaster, or you just stumbled across this channel while looking for Mexit gossip, there's a fair chance you'll find something here that'll make you better at predicting and protecting yourself against political uncertainty, and maybe make a little money in the process. We'll be talking to the money-makingest prediction market cowboys who actually scratch out a decent full-time living on these exchanges about exactly how they go about trading everything from the Electoral College to Trump's Twitter feed. And to maintain an air of gravitas, we'll balance them out with some stodgy academics, political pundits, and maybe an elected official here and there. And we'll pick apart all the late-breaking price action on the headline-making markets, like the 2020 Democratic nomination, Trump's re-election, the congressional balance of power, and, of course, impeachment theater. All while keeping a keen eye out for mispricing, arbitrage opportunities, and correlations among markets that might not be obvious to the careless observer. In this inaugural episode, we'll talk a bit about exactly how these markets work, how they came to exist, and we'll make a few picks of interesting trades as we head into the 200th Democratic debate. We'll also be joined by the founder and editor of the fine prediction market research and analysis website, Star Spangled Gamblers, for his 2020 outlook. We're glad you're here. Now let's shoot the bull. So a little background about me before we continue. I'm the founder of American Civics Exchange, where we focus on the research and development of financial products and exchanges tied to political outcomes, whether elections, changes in tax rates, tariffs, drug approvals, energy policy, you name it. This is a major source of economic risk which is unhedgeable and unmanageable through traditional financial products, unlike virtually any other category of financial risk, from oil prices to interest rates to hurricanes. So since 2014, I've also been doing market curation and various odds and ends for predictit.org, one of the leading political exchanges. At Predictit, my primary daily responsibilities involved writing the rules that govern the settlement of the more than 5,000 markets we've launched since listing in 2014. Now, I did just hear the collective groan of countless political traders across the internet getting ready to send me angry notes about how they were wronged by a controversial market settlement, and we'll get into some of those nasty but happily infrequent edge cases with our guest today. But that sausage-making process is actually one of the most fascinating aspects of this new category of financial products. This is one of the bleeding edges of financial market innovation, and getting to live on that frontier is as thrilling as it is maddening. Figuring out which events can be defined 100% unambiguously, spoiler alert, virtually none, what kinds of uncertainties enough traders can devise a thesis about and trade to make a market liquid, and which will avoid raising the eyebrows of the regulators. It's a fun and often messy process, the result of which, nonetheless, is something a little bit magical, a real-time, constantly evolving indication of what the market, the financially motivated, usually rational aggregate of traders believes to be the odds that Trump will finish out his term, or that Democrats will retake the Senate, or that Andrew Yang will win at least one primary, Hunter Biden will be indicted, Scotland will split from the UK. You get the picture. These are not aggregates of backward-looking polls asking a few narrow questions or a consensus among partisan pundits and talking heads. No, in the market, Democrats and Republicans' money is equally green, and any politically motivated, biased reasoning leads to financial ruin at the hands of the cold and beautifully dispassionate market forces. Now, I recently departed Predictit to focus on new American Civics Exchange projects, the first of which is this show, and I am certainly glad to have you here with us. Now, let's talk for just a minute about how these markets came to exist. Even if you've never encountered a prediction market, you're probably familiar with traditional financial markets for securities like stocks and bonds, which allow companies to raise capital from the public, or foreign exchange markets, where participants trade pairs of global currencies. You may also be familiar with derivatives markets, in particular the futures markets, which are sort of interesting in that they facilitate the trading and the more efficient reallocation of risk. With futures, a company can offset its financial exposure to the price on some future date of oil or soybeans or frozen orange juice, or whether the Federal Reserve is going to raise or lower interest rates. So political prediction markets are pretty similar. You have an exchange where buyers and sellers come together to trade some element of political risk, say whether a Democrat or a Republican will win a particular election, whether a piece of legislation might be passed by a certain date or a certain regulatory decision might go through. The only difference between these markets and traditional futures markets is in how they're regulated. The CFTC has introduced a carve-out from typical futures regulation for a couple of university-sponsored nonprofit markets, one of which is Pidot, the other being the Iowa electronic markets, the exchange that actually pioneered this approach nearly 30 years ago. Now, these exchanges can trade a wide variety of political events so long as they abide by a few restrictions. The critical one for our purposes being that your position in any contract is capped at $850. This both prevents the market from operating like a traditional futures exchange with institutional traders, and it protects retail traders participating in these unregulated markets from losing their shirts. So this is a bit of a bummer for professional or would-be professional prediction market traders, but with so many events listed for trading, hundreds on any given day, there's still plenty of opportunity to put a lot of money to work. So another key restriction is that these exchanges cannot trade events involving dastardly things like assassination, terrorism, or acts of war. And this restriction came from the 2010 Dodd-Frank financial reforms and was meant to ward off the kind of market that the Defense Department actually ran a few years earlier called the policy analysis market. This is a really interesting attempt to crowdsource intelligence about future terrorist attacks. And this was deemed unseemly when it came to public light, and it was shuttered in 2003. Now, of course, with the kind of geopolitical uncertainty we're seeing in Iran in recent weeks, to take one example, with not only national security but economic and electoral implications, it might be nice to be able to trade some of these events directly, but one can understand the unintended consequences of real money markets on acts of terror. It can throw off useful intelligence, but it might also offer a financial incentive to ne'er-do-wells to actually take a position in the market in an event that they in turn have the capacity to bring about. Now, if you're new to this world, you're likely still wondering about how these markets actually work. So here's a very quick primer using Pidot as the model. Each event listed for trading on the exchange represents a binary or a yes or no political outcome. Will Trump win re-election? Will Bloomberg win the nomination? Will Democrats take back the Senate in 2020? When entering position in the market, let's take Trump's re-election. You can either buy the yes or the no side. So for each share you buy in that market, you'll collect $1 on settlement if you're on the correct side. So if Trump's trading at 60 cents, you could buy a share of yes for 60 or a share of no for 40. The really interesting aspect here, though, is that you don't have to wait until election day to exit your position. If you bought yes at 60 and tomorrow it goes to 70, you can sell your shares for a 10-cent profit. And the professional traders, the active traders, do this all day long, going in and out of various positions as market sentiment swings or as new data comes out. Very simple, tons of fun. So without further ado, let's get to today's guest and dig into some of these hot markets. Now, for this segment and for every segment of this show, past, present, and future, please note that all content and opinions presented, whether by a host or a guest, are for informational purposes only and should not be construed as investment or other advice. Keendawg, the founder and editor of Star Spangled Gamblers, is a former GOP House staffer, television writer, and columnist for a variety of leading publications. And he's here with us now. Keendawg, thanks for joining us.
Yeah, what's up, Flip?
You know, I was taking a look at Star Spangled Gamblers today, and I see the top post is titled WTF is Political Gambling and WTF is Star Spangled Gamblers. So can you give the viewers sort of the TLDR on those WTFs?
Yeah, well, here's the thing that's fun about it is the shock value of political gambling is how simple it is. It is literally gambling on politics. And most people just don't believe you until you say that. You like gotta look them in the eye in a kind of creepy way and say it like 3 times and they get it. But it's think of anything going on in Washington or in the world, place a bet on it and see if you're right or wrong. That's political gambling. And at Star Spangled Gamblers, we cover news that my laugh line is no woke clickbait, no MAGA porn. We only cover news with the question of what's going to happen and why, and how can we profit? So we have a lot more fun. It's a casino versus a government building. It's fun.
Right. And it seems that political uncertainty has been increasing steadily in recent years, and it appears that 2020 is set to take it to a whole new level. Of course, it's a presidential election year following Trump's obviously unexpected election in 2016. It's amidst a historic impeachment fight. We have Middle East war drums. How do you see the year playing out and these biggest uncertainties?
Well, I guess I would question the premise a little bit, because I feel like the idea of political uncertainty is usually based on like a politician's idea that we're always kind of fighting the last war. So I think that institutions aren't static, and job descriptions for politicians aren't necessarily static either. So the fun of it is, and like in Hollywood, we say, give me the same, but only different. And it's like, okay, well, it's still the same, but it's just a little bit different. So I don't know if I'm rocking the boat too much by characterizing politics as being more stable than some people think it is. But that's kind of my take.
That's interesting. And of course, it's those differing opinions that make the market. And if you're of the mind that things are actually deceptively stable, then that may give you the opportunity to profit off of other people's anticipations of greater volatility, particularly in these 24/7 political prediction markets that respond in real time to news, whether it's an Iran strike or a new poll coming out or a presidential tweet. If you can keep a cooler head and you feel that these things aren't actually moving the needle too much, then you can profit off of other people's kind of more knee-jerk reactions. Does that describe your trading strategy to some extent?
I mean, like, look, most of us, we read the news, we think about what's going on, and our mindset, whether we know it or not, is that things are just going to be the way they are now forever. But making money in political gambling, Predictor works like a stock exchange. So as new information comes in, traders will buy at higher or lower prices, depending on the probability of like Trump getting reelected or Hillary Clinton running or something like that. But what that means is you don't really have to be right to make money. Like, you just kind of have to be a little bit ahead of the story. You have to kind of see how things are going to change and be in front of the herd in anticipating that change as it translates to price. So that's getting a little bit academic, but it's really just like, keep your head on your shoulders, understand the big picture, and recognize that things are going to change, and just be smart about what will change next in any of these questions about, elections or legislations or court cases.
Right. Yeah, that's an interesting point. And given that these are markets that you can get into and out of, it's not as though you're laying a bet with a bookie and then you have to wait for the event to take place or not to realize your return or lose your money. You can buy and sell, and therefore you're not only gambling or trading on what the outcome in question is going to be, how it's going to unfold, but it's how traders are going to react in real time to various interim bits of news. Again, whether it's polling data or economic data or geopolitical events. And if you can say, well, I see this thing happening overnight, an Iran missile strike, and I think this doesn't actually change the odds of some outcome, but I know that traders are going to go crazy over this, and maybe I can scrape a few cents of short-term profit here as people kind of try and figure out which direction the market's going.
Right. So, like, for example, I think people in the media and people in America are starting to wrap their heads around the idea that the presidential primary will continue past Iowa, and it might even continue past Nevada and South Carolina too. So, like, I'm looking at California, where Bernie Sanders got a good poll in, and Bernie Sanders is raising a lot of money. And so but the odds are so inflated for Bernie Sanders to win that race. So, like, I'm betting against Bernie Sanders winning California right now. And I'm not betting against it because I think that Bernie Sanders can't win California. I think it's totally likely that he will. I just think that as more information comes in, candidates perform in other states, there will be plenty of data that says that he's not as competitive or he's not as big of a favorite as people think he is now.
So in the Democratic nomination in general, you're commenting on your playing the California Sanders odds. Do you have a favorite in terms of who will actually win the nomination, whether it's sewn up in the first few states or on the convention floor?
I hate answering this question because there's such a high probability that I'm going to be wrong about it. I think that it's hard not to think of Joe Biden as the favorite. But, before we got on this call, you were like, do you see any black swan events?
Right.
I think there very likely could be a black swan winner of this. I think that there are a lot of strong underdogs, and I wouldn't discount any of them, to be honest.
Yeah, that's interesting. And again, we look back at 2016, obviously being the most recent presidential cycle, but also probably the one in living memory that surprised people the most in terms of the outcome, not only Trump's nomination, but of course his winning in the general.
Yeah.
And it does appear now.
Well, it surprised political people. I don't know that it surprised voters, though.
Right. Yeah, it certainly surprised the pollsters and the punditry and the markets. And here you've got a situation where you've had the front runner sort of change hands several times. You had Biden strong for quite a while. He then kind of fell off the map, and a few others took turns at the top of the heap. Sanders and Warren and Mayor Pete and even Kamala Harris, when she was still in the race, was sort of flirting with that top tier. So you've had a lot of changeover recently, with now just a few weeks to go before Iowa. That, as you put it, that could be the sort of the black swan that everyone is anticipating, the high probability of a second or even third tier candidate running away with it. It's just hard to peg which one's it going to be. So what can traders do? Can they put a few, or Biden could win Iowa and he could close it up quickly. But is it a reasonable strategy now for traders to go and sort of place a few chips on several of these sort of second tier candidates they see being undervalued and wait for them to pop and maybe take some profits when they do, or how would you advise sort of playing this field as a whole?
I mean, big picture. Like, I'm kind of a big picture thinker, and there's some people out there who build really minute models and do math that I don't really understand. Mm-hmm. Big picture to me is this has been a volatile race, as you just said. Someone's up, someone's down. Then you meet a new character. Here's Amy Klobuchar over here. Here's Andrew Yang. Let's focus on them for a beat and move on. Mm-hmm. But if you look at the race, we've got Iowa coming up in a little less than a month. So I think that the media coverage going into Iowa of who's in and who's out, is Zoolander cooler, is Mugatu? I think that there's going to be a lot of volatility there. I think that there's going to be market volatility once we get the results from Iowa and people panic and respond there. And there will certainly be another wave of volatility after South Carolina, possibly Nevada. So my philosophy, again, is just to look who's the favorite. Inevitably, in all the different state primary markets, that favorite is going to be overpriced in one or two of them. Mm-hmm. Take some short positions. And then ask yourself, well, if that person loses support, like, who is likely to gain it, and see if there's some price advantage in betting on, I don't know, Elizabeth Warren's down to like 10 cents a share in most of these marketplaces. I mean, she might be done, but she also might spook.
With all of this volatility, anyone in sort of the broader top tier, which would certainly include Elizabeth Warren, to be not written off, but marginalized as a 10-to-1 or worse proposition, there would seem to be some value there for patient traders, at least, that even if they don't want to put in their 10 cents and ride it to the convention, they can at least wait for a good poll, wait for a Biden gaffe or something else that might allow them to recognize some profits from some of these that are now trading in the high single or low double digits.
Right. By the way, 4 debates in the next 2 months. Like, when was the last time Joe Biden went 4 public appearances without accidentally groping someone? Like, it's going to happen.
How about in the general in November? What I've been paying some attention to in the prices in the recent weeks is the overall party winner of the White House. And surprisingly, while the Republican number has been gradually edging up to and now basically at parity with the Democratic number for about a week, it's been almost exactly 50-50. We've seen a lot happen geopolitically in the last week, obviously starting with the execution of Soleimani and the Iranian response, and then Trump's address. And interestingly, while the stock market has been fluctuating wildly in gold and oil and bond yields, that 50-50 number has been almost unmoved by all of these daily and intraday events. What do you make of that? It was surprising to me that while even the mildest of impeachment wrinkles unfolding, some GOP senator saying something mildly critical of Trump, or Pelosi talking about the timing of handing over the articles of impeachment, those can buffet the numbers several cents. All this Iran stuff, while it seemed to potentially have major not only geopolitical but electoral implications, has not seemed to budge the numbers at all. Is that right?
Well, I mean, look, I think that when you talk about gambling on politics, there's oftentimes a political explanation, and then there's also kind of a financial explanation. And I think the financial explanation is a market. I'm looking at it and predict it now. So 2.3 million shares traded. Which party wins the presidency in 2020? So that's like a retail market. That's people who come in, they're like, oh, I'll bet $20 on Trump, or I'll bet $20 against him. And they take their position, they leave. They don't really think about it a lot. So I think that there's money behaving differently in that marketplace. But I think it's also, if you want to talk about politics, isn't the old adage that like literally nobody cares about foreign policy? Like the only time anyone cares about foreign policy is when it's time to cut the foreign aid budget, and that's everyone's campaign promise.
Right.
So I guess I'm not that surprised about that.
Do you think 50-50 is a reasonable price, or who do you think is a better value with coin flip pricing?
I mean, I think it's probably, you're putting me on the hot seat here. I think it's probably better to bet. I mean, you know who Trump is, right? Like,
right.
You don't really know what you're betting on when you're betting on the Democratic
sure.
nominee. And Trump has been resilient. And I think that some of his things that sounded like conspiracy theories and like wacky claims have been at least like moderated and vindicated by the kind of milquetoast boner killing impeachment that was just imposed on him by the disorganized, whatever happened in the House.
Right. So what kind of markets would you, or what kind of events would you like to be able to trade on that you can't? I mean, there's certain restrictions. Some are set by the CFTC, the federal regulators for these kind of markets. You can't make markets in things like assassination, acts of terrorism, or acts of war. So, we're talking about the Iran situation, and a lot of that can't be distilled into a tradable market. But that restriction aside, there are obviously markets on the electoral stuff, on impeachment, on legislation, on Trump's Twitter activity. What kind of things, what kind of outcomes do you feel you'd like to be able to trade you currently can't?
I want to talk about everything because this is now I'm like pumping up my soapbox a little bit here, but most people trade and gamble on politics because they want to make money. I think it's a really interesting vocabulary, and I think it's a way to like get people to focus on issues that are boring and inaccessible and make them relevant to the way they think and like to the moment. And this is why it's important. And like these are the incentives for actually learning the right answer. Mm-hmm. Now, what do I personally want to trade on? I spent 5 years horse trading on Capitol Hill. So I want to bet on like, when is this committee going to discharge this bill for markup or something? Because that's what I know how to do. Right. I write lines for actors. I write speeches for politicians. I want to bet more often on what people will say because that's just how my mind works. Right. But I see this as a new vocabulary and a new experiment in communicating about politics in all of its forms if we're exposed to them now.
Yeah, and it was really interesting. And during the years when I was, writing contracts and market rules for Predictit, we often spent a lot of time, trying to guess, or, it was an informed guess, but it was still a guess in terms of what traders will take up, what will generate meaningful trading volume. And so we'd spend a lot of time crafting markets about, not even esoteric legislation, but major headline making legislation, and not even just the committee votes or procedural votes, but, will this major piece of legislation be passed by X date? And we'd find that it would just be crickets, despite the fact that it was significant, that a lot of people had an opinion about it, and that it was making headlines. Did not tend to get much traction, whereas things like, will Trump tweet the word Biden in the next week, people would go nuts for. So it's a little bit of an art form to find what will enable people not only to generate an opinion on, a tradable opinion on, but I think, part of it too is what will there be sufficient new information rolling out about over the course of the market that will keep it interesting, keep volume churning, keep the prices moving, and keep people coming back and treating it as an exchange to get in and out and adjust positions rather than simply lay down a marker and let it play out.
Well, and I would say a lesson that you learn if you work in the media business is people respond to people. So like if you can put a face on a market or a face on a question, I just think that's always going to generate more interest. I mean, that's like fundamentals of storytelling, fundamentals of writing there. Put a face on it.
Yeah.
This is a question I've been dying to know the answer to.
Yeah.
And I don't know if you kiss and tell, Flip, but when you were writing rules for predictive markets, were you guys ever like, oh shit, we didn't see that one coming? Like, how are we going to get out of this one?
Yeah, absolutely. And that was the one thing that kept us up nights more than anything else was that we had neglected or overlooked some edge case, some strange way that an outcome could unfold, that the coin could land on its edge that we hadn't captured in the rules. And the first rule of thumb that we came to learn was that if it involves Trump making a even slightly subjective decision, that it was a minefield. I mean, did he move the embassy? Yes or no? That turned out to the coin landed on its edge. Did he withdraw from the Paris climate treaty? That coin landed on its edge. But the one that kept coming back, and it was sort of the white whale of how to write the question correctly, and any predicted trader that's been in the market for a while knows about this, is exactly about the government shutdowns. And it became almost laughable, the fact that we couldn't define, or at least to everyone's satisfaction, unambiguous satisfaction, what it means for the government to shut down. It's a really good example of how, when you can sort of define something colloquially or informally, and it's pretty simple. Will there be a government shutdown? But of course, when we had that spate of several shutdowns, 3 or 4 or 5 over the course of several months, some of them were really quite technical shutdowns where you had employees furloughed, but it never really amounted to anything because the furlough was lifted before most people had to report to work that day. And yet were there some people at overseas stations or that worked, graveyard shifts that did have to report to work that would have had to report to work, but that didn't because they were furloughed? Or was the fact that they're not allowed to use their email at home while on furlough enough to count for it being a furlough, even though they reported to work as scheduled and received their paychecks on time? So it's a good sort of microcosmic example of how something that can seem pretty simple can become really, really complicated.
I'm guessing most of the people listening or watching right now are not predicted hardos, but there's a cartoon character that is now just assumed to exist in every predicted market called the Rules Cuck Panther. And I think the legitimacy of Star Spangled Gamblers, which is the #1 website on the internet, not fake news, was really founded on the Rules Cuck Panther. I stand by him, and when I'm gone from this planet, the Rules Cuck Panther will still be here. So look out for him on the predicted comment boards. He's a thing. He's real.
So when you see the Panther, you know that a rules clarification or a quote unquote cuckening is to emerge. That's right. We're going to have an edge case, and half the people are going to be pissed off that they got the wrong settlement.
Correct. That's right. In trader parlance, a rules cuck is what happens when you're right. When you bet that the government shutdown that lasted 3 months actually happened,
right?
But you lose all your money.
Yeah, indeed. And when it comes time to offer a clarification of a rule that could have multiple interpretations, it goes in sort of this special gray comment box, and you often see it referred to as the gray box of cuckening. The comment boards have really erupted into their own subculture. But it's actually one of the most fun parts of playing the market. I think in 2016 or 18, leading up to election day, whichever was the dominant market going into that election day, actually had over 1 million comments by the time the market was settled. And I'm sure by the time we get to November 2020, that will pale in comparison. It is a very lively. It sort of reminds me of the early days of online trading with the Yahoo Finance message boards, and it was not all, but it was majority people trying to falsely influence the opinions of others, saying, "Oh, can you imagine buying this at 70 cents because they're actually trying to get in at a slightly better price?" So it takes a little bit of reading between the lines to separate the signal from the noise, but they are nothing if not reliably entertaining, if not always informative.
I've actually got a trader who's found me on Twitter. By the way, my Twitter handle is @Keendawg SSG, who every week now, it's one of the best columns we have. He sends a weekly column that's just the highlights of the predicted discussion boards and all the insane conspiracy theories and like suicidal thoughts getting passed around between traders who are losing. It's really must-see TV.
Yeah, I'll have to check it out. I want to go back to one other thing you mentioned in terms of you were talking about sort of the purpose and use of these markets, not just to make predictions or to make a profit, although that is sort of a primary use case, but it's the information and analysis and research and engagement that these kind of markets can throw off. How do you see these markets in terms of their not legality, but their legitimacy, the efficacy, that they
do they actually predict things?
Well, not even so much that. Obviously, that's a goal. You want to see that they do as well or better than traditional polling or pundits. But in terms of the engagement of the public in the political process, the electoral and policymaking process, in terms of any academic or research value, being able to understand correlations between markets, or even just as a more real-time gauge than, say, polling. We're going to have to wait a few days to find out what the public thinks about the Iran fallout, following Trump's comments as we record this on the morning of Wednesday the 8th. And yet you're able to see in real time when something like this comes out, the impact across dozens or even hundreds potentially of related markets. How do you see that in terms of just the broader value that these markets bring to the public?
I'm like a little skeptical of like whatever that higher calling of predictive trading is. I mean, right now the demographic that does it's kind of narrow, so you're sort of measuring their consumer preferences a little bit.
Right.
But my call to action is that there's just a lot of stuff you can't talk about in the media anymore. And if you look at how people talk about politics surrounding predictive, they're actually, like, believe it or not, they're the ones who are actually talking about facts. Like they can't say, well, the president is a stable genius, like he claims, when the president doesn't bother to fill a lot of cabinet positions for months and months and months. I've made a lot of money by betting that the president will not fill basic cabinet positions. So that's a fact. Out of this, if you're talking about people on the other side of the political aisle, you will lose a lot of money by saying that, well, Stacey Abrams really should be president, because that's how you get people to clap for you on Twitter and in your office at BuzzFeed. Because, what are you looking at? Like 2% odds or 1% odds that have shrank from 20 years. So like the point is that by putting a political conversation inside of a casino, I think it ironically creates a vocabulary to deal with the modern reality of politics that every other media outlet is having difficulty grappling with. It's weird and it's dirty and it's messy, and it's also can be fun and civil too.
Yeah, it's a hell of a lot of fun. I want to encourage everyone to check out starspangledgamblers.com. You mentioned your Twitter handle. Can you give us that again?
Keendawg, SSG, or you can just search Star Spangled Gamblers.
Keendawg, DAWG, SSG.
That's right. It's like DAWG. I also have a promo on there for those of you who are curious about getting in for the first time.
Yes.
Predict it'll hook up with $20 to get started trading.
There you go. Go through Star Spangled Gamblers site, get $20 to kick you off on Predict It. Keendawg, thanks so much for joining us. Hope you come back and talk to us again soon.
Me too. Thanks, Flip.
You bet. All right, folks, time to debate the debate. Yes, there's another debate coming, and you may be sick of them by now, but trust me, they're a ton more fun if you've got a prediction market as your second screen, whether you're actually trading the markets or not. Now, Predict It doesn't yet have the debate-specific markets up, other than who will qualify for the stage, but they usually go live a day or two before the event, which is scheduled for the night of Tuesday, January 14th, in Des Moines, Iowa, and will air on CNN. To find the debate markets once they do go live, there will likely be a debate tag in the keywords drop-down menu, and if there's not, just type the word debate into the search box and they will all appear. Now, we don't yet know all the markets they'll put up, but typically we'll see which candidate will get the biggest polling bump over the several days following the debate. Several days because polls are outdated, lagging indicators of political sentiment. Who will see the worst polling decline, what hot-button buzzwords might be mentioned, who will get the most speaking time, and so on. Let's focus on who will get the biggest polling bump and decline, because those are virtually certain to be listed. And these are usually based on the Real Clear Politics polling average. Of course, we can't see the prices yet because the markets don't exist yet, so we can't say anything about whose prices currently offer the most compelling value. But it is my humble outlook that Biden, currently with 29%, will see the biggest decline, and Pete Buttigieg, with 7.5% support, will see the biggest bump. Looking back at the December 19th debate in Los Angeles, it actually didn't move the needle for anyone, which is perhaps not surprising, given that most folks were well into holiday mode by then and not paying a lot of attention. But in the previous debate, in November 20th in Atlanta, Pete saw a 4% bounce and Biden a 4% decline. Pete's simply been strong and getting stronger in these debates and was the only one to see a measurable increase after November. We saw a similar story in October in Ohio, Pete up, Biden down, with no one else really moving other than Warren, who's been kind of on a consistent slide in recent weeks but seems to have found a floor. And with the smallest debate field by far in Des Moines, Pete's got a lot more speaking time than he has in the past, when he's typically lagged Biden significantly in that regard. Biden, on the other hand, of course, is not only prone to epic gaffery, but his opponents will likely be more focused on him, as he's recently retaken the top spot among traders, following Warren's long, gradual slide to a three-way tie for a distant third, with Pete and Bloomberg behind Biden and Sanders, and the ammunition to tie him to Trump baggage in Ukraine and Iran, and most recently some flip-flops on war powers and executive authority, which will likely be in focus. Biden has never been great on the debate stage, and he's certainly not at the top of his game right now. With fewer candidates on the stage, you might not get the chance to scoop up these shares in the low double digits as you might have previously, but you might look to buy Biden for biggest loser and/or Pete for winner with decent confidence in the low 20s, even the low 30s. If you can get the pair for anything under 50 cents, you might well want to back up the truck, as it seems like a decent bet that either Pete or Joe will be top or bottom respectively, meaning you double up if either one is, and you quadruple up if both hit. That said, remember that you're trading on an exchange, not placing a bet with a bookie, so you don't need to wait until market settlement to get out. So, for example, if you go long Pete at 20 cents and he has a big night, his price might rise to, say, 60 by the end of broadcast, at which point you might decide you're happy with that profit and cash out. The wild card here, however, and it's a big one, is billionaire Tom Steyer, who suddenly and totally unexpectedly qualified for the debate at the last minute with huge showings in Fox polls out of Nevada and South Carolina. This was such a surprise that you could have bought Steyer qualifying shares at 2 cents a couple days ago and banked a 5,000% return. So can Steyer one-up Mayor Pete for the biggest bump? He does have basically nowhere to go but up, given that he's only at 2% on Real Clear Politics, but I'm not sure this debate opportunity is going to translate to a significant move in the national polls. His budget makes him an outlier in the field, and that clearly helped him buy a podium, but it's far from certain he can convert on that. The country has seen him on the debate stage already with lackluster results. Still, keep an eye on his pricing when this market launches. If you can go long Steyer for 10, even 15 cents, it might be worth it as a lottery ticket. And should he come loaded with zingers that actually land, you might even be able to cash out at a profit before the end of the night. We want you to let us know what you think about these picks in the comments, where we also invite you to offer your own brilliant analyses on these or any other markets currently trading. I want to thank you very much not only for tuning in, but for actually sticking around for the whole episode. Be sure to follow us on Twitter @OldBullTV and subscribe to this channel to make sure you catch the next episode, where we will be investigating whether and where prediction markets really can outperform pollsters and pundits, and diving deep into the Trump re-election odds. That one's been pinned at 50-50 recently, with ongoing Mideast tensions, stock market records, and the Senate impeachment trial set to kick off, and maybe further narrowing the Democratic field. Will it finally see some action, or does it stay a coin flip? We'll get into it. I hope you'll join us. We'll see you then.